Welcome back for another Polygon Matic price prediction analysis video, and at the time of this recording, Matic continues to hold below the 20-day MA here on the 4-hour chart, which is now acting as resistance for us to continue gearing up. We have also seen a rejection at our key area of resistance at around the $0.784 mark. And after getting rejected, you can see that we are seeing a bit of a pullback in a move that has also continued to obey the Elliot structures. And zooming out here on the 4-hour chart to first give you my short-term Elliot analysis that I'm expecting to play out in the next coming hours, you can easily see that Matic gave us a low at around the $0.4954 mark on the 11th of September. Before we saw this impulsive move to the upper side, breaking above significant areas of resistances in a move that gave us a high above the $0.98 mark, completing the formation of this Elliott wave count 1 to the upper side. And after seeing the formation of that first wave, we started a corrective structure in the formation of this wave 2, in a move that is now giving us a pullback into the minimum target areas for the second wave, highlighted on the charts using this red target area, which is an area that I came up with using the Fibonacci's, connecting the fibs from the low of the first wave to the high of that wave 1, giving me a minimum pullback target area between the fib level 0.382 and the fib level 0.618. And that is between the $0.7985 mark and the $0.6822 mark, which is an area that we are just about to fully maximize. And there are chances that in case in the next coming hours we continue seeing further weakness, then we can easily get one more new low in the formation of this wave 2 within this red target area. And once we have one more new low, we can expect to see Matic give us a reversal to the upper side, breaking above resistances with successful retest. And once the retest is in and a success, then we can continue gearing up and see the start of an impulsive wave to the upper side in the formation of that wave 3, which is what we expect after seeing a bit of a pullback in the formation of this wave 2. And the worst case scenario can only play out in case we see further pullback into the area, and then at some point we see a breakout out of this area to the lower side. In case such a movement plays out and we continue heading further down, then I will be watching out for support at around the $0.6227 mark, and as long as that continues to hold, we can expect another bounce back to the upper side. Jumping to the daily chart to now give you my long-term Elliott wave analysis that I'm expecting to play out once the bull market is here. Here on the daily chart, you can see that back in 2020, Matic gave us a low down here before we saw that impulsive move taking us to all-time highs above the $2.9 mark, completing the formation of this Elliott wave count 1 to the upper side. Then we started a bit of a pullback in the formation of this wave 2 into the minimum target areas for the second wave, highlighted on the charts using this red target area, which is an area that we have now fully maximized, and chances are we now have a low in place for that wave 2, and in the next coming weeks or maybe months, we can get a very impulsive move to the upper side in the formation of this wave 3. Minimum target areas being given by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area above, that is at the fib level 1.618, and that is above the $5 mark, which is the minimum that we can expect Matic to do in the formation of that wave 3. And that is what I'm watching out on the short term and also on the long term here on the Matic chart. And I hope that video was of much help to you, and I hope to catch you in the next one.